Welcome to our Forex Market Focus Report for Tuesday, September 10, 2013. Let's go ahead and take a look at our calendar for today. We saw in China some numbers get released earlier today. We saw industrial production print at a better than expected 10.4%. That bodes well for higher yielding currencies like the Australian dollar and the New Zealand dollar. We also saw Chinese retail sales come in pretty strongly. And we saw an improvement in Japanese machine tool orders for the month of August. New Chinese yuan loans came in lighter than expected at 711.3 billion, but were an improvement over the prior reading. Also in China, we saw an expansion in monetary aggregates for the money supply. This suggests People's Bank of China continues to expand the monetary supply, and this led to a higher Australian dollar today. It was a relatively quiet day over in Europe so far. We saw some minor Italian GDP data, which came in lower than expected, and we anticipate a relatively quiet US data as far as numbers are concerned. Our primary focus today in the US session is going to be President Obama's speech regarding Syria. Yesterday, Obama signaled that he may support a Russian-led initiative that would see Syria turn over control of its chemical weapons stockpile to international monitors. Also, U.S. Congress is nearing a vote, possibly as early as this week, that would authorize force in Syria for President Obama. Let's go ahead and take a look at some of our FX market activity today. This is our US dollar daily activity index. We can see the dollar is basically flat, as indicated by its position here near the horizontal blue line. Moving over to the euro, we see the euro is overall underwater on an intraday basis. The Japanese yen is also significantly underwater, and in fact is our worst performing currency today. The British pound has eked out a little bit of a gain on an intraday basis against other currencies, whereas the Swiss franc is also quite weak today against other pairs. The Australian dollar continues to outperform its peers, and in fact is our strongest performing currency on an intraday basis. The Canadian dollar is also relatively strong today, above the horizontal blue line, representing 0. And the New Zealand dollar, of course, is also outperforming the market today. Reserve Bank of New Zealand is going to issue an interest rate decision on Thursday. We expect the RBNZ will keep interest rates unchanged at 2.5%, but we are waiting to see if the RBNZ and Governor Wheeler indicate any additional monetary policy tools will be enacted and utilized to slow down overheated sectors of the economy, such as the housing and property sector. Let's go ahead and take a look at some cross rates that we've been keeping an eye on. Yesterday we spotlighted the Canadian dollar Japanese yen cross rate. This daily chart indicates, of course, that the 95.59 level has become an area of support for this cross, as indicated by this blue up arrow. We talked yesterday how the pair traded above this yellow downtrend line, and in fact today we saw continued strength on this cross. It took out this key 96.37, 96.41 area that we talked about yesterday. And our next upside target for the Canadian dollar Japanese yen cross remains this 97.50 level that we see with a red horizontal line here. Yesterday we also talked about the British pound New Zealand dollar cross rate. Again, we are today looking at a daily chart of this cross rate. We can see that today's intraday high right here corresponds to a yellow downtrend line coming in on this chart. We can also see that today's intraday high corresponds to a resistance level of 1.9612, and today's intraday low corresponds to a retracement level of 1.9468. We have up arrow and a down arrow here indicating support and resistance. Now, as we can see, today's activity has been right between these key resistance and support levels, which means this has been a very strong technical trade for the past 2 days. Let's go ahead and take a look at another cross rate. This is the euro against the Australian dollar. We see ever since the euro touched this 1.50 area up here, it's been a pretty good sell. Right now it's trading around the 142.60 area. And we can see that this previous support area of 143.66 has now become resistance. We can see the cross rate has been pressured at or below this level for 3 consecutive trading days. This blue arrow indicates downward selling pressure. We see that the rate today moved back below 1.4308, and our next downside target remains the 141.38 area, followed by the 139.56 area. We would see support right around the psychologically important 1.40 area before these levels are breached down here. This is a chart of the Australian dollar against the US dollar. Yesterday, we can see that the Australian dollar found intraday support right around this yellow downtrend line, as indicated by its bounce off this area. We saw continued buying pressure today, as indicated by this blue up arrow, and we can see that the rate is now trading above this yellow downtrend line here. Also today, the Australian dollar took out this 92.56 area, which was previously resistance, and if the Australian dollar continues to appreciate, we would expect an eventual test of the 95.09 resistance area here. The final cross rate that we're going to take a look at today is one we really don't look at too much. This is the New Zealand dollar against the Swiss franc. We don't know whether or not your FX broker or dealer even quotes this currency pair, but it's worth looking at. Some might call this a triple bottom, some might call this a double bottom. Regardless of what your technical view is, we can clearly see that the New Zealand dollar has moved above some key downtrend lines in recent trading sessions. It's tested this downtrend line for 3 consecutive days. This blue up arrow here indicates that recent technical resistance, which comes in around the 94.79 area, has in fact become technical support. The New Zealand dollar is trying to establish a foothold right around this area. If the New Zealand dollar continues to appreciate, we would expect a test of the 75.94 area, followed by a possible test of this red horizontal line, which represents the 77.10 area. We thank you for watching our Forex Market Focus Report today.